All right. Good morning, everybody. Happy holidays. Hopefully, it went well for everyone. We don't really have a lot of news today, and it's a short day. So, there is the potential for things to really move. But the base case argument is that we're going to hold the line. I can kind of vaguely recall that the last couple of years, we've had this grind up in this time frame, this day after the holidays, and that the following Monday we kind of gave it all back again. That's not seasonality speaking. That's just an old man looking back. So maybe maybe it's wishful thinking. Oh. So on the one side of this, we don't have anything in the base case argument is we just hold the line, go sideways today. But I wouldn't be surprised if we just get this slow grind up, even though that's not my base case argument. We got the UK, Europe, Japan, Hong Kong, really not doing much. Markets kind of gave it back when you look at the Dow, the NASDAQ, the S&P this morning, but small caps took it and haven't given anything back. Close to 1% move today. So if we are going to base and stay sideways, I'd look for small caps to maybe give it back. You know, it's the only one that hasn't mean reverted overnight. So you got that route, at least there'd be something, right? And then if we base, maybe take a look at gold or oil, just throwing some ideas out there because I get it. You know, you want to trade. The thing is, don't force it into trash, right? If there's just nothing there, then there's nothing there. So, you know, if really tight range, not a lot of participation on the edges, that's the very definition of a sideways day, not a range day. I'll trade a range day any day, but a sideways day, better off just looking for a different market or I don't know, go kill zombies or something. It was interesting to note, and I'm not seeing there it is. The zero gamma is underneath the foot wall. So this could be because that's a false foot wall. Um, spot gamma's kind of gone into that before, or it could be a shift. And if it's a shift in gamma, it's a precursor for price, right? So that's not a today problem. That's just a kind of a big picture problem, right? Kind of you want to keep track of what's happening with that zero gamma level. 42,000 kind of shows the low participation considering we've seen 140,000 in the overnight within the last week or so, that we're really just in a low volume environment. It is very likely that the ADR red lines are going to be our trading day today. And and I think that would be generous if it is, right? If we want to just kind of lay it out there. And I would not use anything from Wednesday, right? I know you see candles there. Tie all of that in to Tuesday from the Globex to Tuesday night into Wednesday and run it like that. And when you do that, you'll see that you're almost perfectly lined up with today's ADR. The ADR is just a little higher. It's really close to that 60-50. It's a key options level. That would be the top side of 111 breakout. And if we move this out of the way, we could see the wick down here. If we ignored that wick and just took the body, that's your 59.81 ADR low. Yeah, it's a perfect lineup, right? You want that confluence. You don't want to miss out on that insight. So that's my marker for the day. If we get out of this range, then we've got something to play. I don't expect to get out of this range. Now that's 60 points-ish, right? 70 points from ADR to ADR, 67. So if we were trading with, a good, say, solid range material where we get a lot of decent response along the edges and we leave key pivot points on flow, yeah, we can get some decent trading out of it. Otherwise, if it's sideways trash, then price will just meander along and it won't really generate much push off of the pivot points. I see a market maker move just popped up. We want to see if that grows as we get closer to the open. Now, if you don't have Thinkorswim, just use, whatever broker you've got, as long as it's got options on the futures. This is why the market maker move showed up. The front and the back are now equal. Look to see if that one in the front continues to go higher. If it does, remember, we don't have anything on the table today except for maybe some data out of Canada, which, we threatened tariffs on Canada too. Now they're trying to institute some sort of multilateral border agency. Maybe they decide they want to do a tit for tat instead. If they announce anything like that, we could see something this morning from the Canada side. Otherwise, whatever's causing this market maker move wouldn't be because of some pending economic event. It would be something else. So keep your eye on it. See if it shows back up. You can see it's gone now, but it was there a moment ago. If they start hedging in the front end, what makes this implied volatility move is out of the money options trading. This is an average implied volatility of all of the out of the money options on the put side and the call side combined. So when they come in and they run this out of the money options trading, that moves the implied volatility and it can jack it up higher than the next series out. I really think this is going to be our range. And of course, we want something actionable. So you can start with Wednesday, just in the RTH session. And that'll give you something that's more actionable since it's right there, really close to what we've already got. From that, you can expand into the Globex. And there's your 3 layers of engagement. All right, today's central pivot is inside of Wednesday's central pivot. And remember to just treat all of this as one entire Globex range, right? Everything from Wednesday at the close until now, all as a single Globex event. So today's central pivot is inside the previous one. The floor pivots are almost identical in their location. It's not bullish or bearish. It's just neutral, right? It's the same. The only difference is today's channel is more narrow than Wednesday's. A narrow channel would imply a breakout, but just because it's more narrow doesn't mean it is narrow enough. When I zoom out, you can see that this day is a really narrow day, even compared to what we have today. So sure, today's more narrow than this big day, but it's not narrow enough for us to be looking for a trend day. Just keep in mind that these channels don't make price trend. They just give us ideas on if a trend could happen. We don't have an MDP either because we've already hit the pivot for today. We got a point of control just slightly lower than this point of control from 2 weeks ago. And we do have one to the downside if we break out and begin to expand. 59.20 area. We've built a really nice D-shape profile. If we're looking for anything, it could turn into a profile that looks like that we finally break down out of it, or flip that over and it would be a profile of like a P-shape profile with a lowercase b, right? That we would break out and run up and trail it into the close, and we'd have a profile that expands up. Thirty points from the value area low to the value area high for the week. It's really tight, it's compressed. All of the moving averages are underneath us. So if we do try to break down, we've got the 10-day before we even get to Monday's low. And we've got the 3-week there as well before we get to Monday's low. We've interacted with that 10 this week. Monday in the Globex before Tuesday, we tagged the 10. So we're just looking to keep it, right? Yeah, that market maker move is growing. 10-day, 30-minute volume profile. We're just holding the level here. This is like a zone or a range. We won't look for that thing to be support or resistance. It's going to be more of a magnet at this point than anything else. We would have to leave the range or leave the zone and then come back to the zone for it to begin acting as any sort of real support or resistance. So that's the zone. 59.80, call it 60.50 on the upside. I know that it's not exactly right, but it's close. The round number would work in our favor. 60-point range. This isn't going to move anytime soon. The only thing that could make it move is if we drop down into 59.20 area. Then we would be replacing this volume down here, just like we were replacing this volume up here when we got here earlier in the week, and we brought that point of control up to us. Looking at the 5x5, there really isn't a good way to join these two together the way that I have it right now, but you can do it if you were to take your point of control and just adjust your multiplier I think if you kick that up another one, it'll take yesterday and today and kind of tie it all together. Now, see, it took this day and it added it to Wednesday instead of adding it to our day. So that didn't work either. It is possible, right? Set the chart down to 2 days and then do it. It'll take yesterday, today, put them together, give you a profile of it. I wouldn't stress on it though. Just price wise, put them all together. All of it is Globex. That's your high and low of the profile. And we got to work to get out of that. We do have next week's range on the table. Remember, these ranges are based on two pieces of information. One is time and the other is volatility. This is a 4-day week and we're going to be comparing it to a 5-day week. So we would expect next week to have a wider range just because it has more days. Looking at it so far this morning, it's not wider. It's even more narrow than our current week's range. So while we have more days next week, so far this is looking like we have a lot less volatility next week. At first glance, that might make you think, oh, well, heck, that's great. That's less risk. We must not have anything really big on the table. I would look at it the other way around. The low volatility showing up here could really imply that there's something big on the table and the market is expecting 2 or 3 days of sideways activity while we wait for that big something to show up. Plus, this isn't set in stone yet. So these lines are going to continue to move through the day today. And I'm just going to leave that box here and we'll look at it again on Monday. At the end of the day, around 4:15, these lines are going to lock into place, just like all of these old lines back here. And then they won't move anymore. But through the day today, they're going to move, expand, and contract. And what we have now is not our real representation of next week's range and volatility yet. So we are still above the 10-day, kind of working our way back up. This thing, it doesn't look much like a wave. It's not really smooth, but that's how you want to think of it in a wave format. It's just the market, right? Expansion, contraction, waves. Higher and lower from the 10, back to the 10 and moving back up again. So we're not overbought. We're at a good spot when it comes to the 10-day. It doesn't owe us anything. And looking at the weekly, the same thing. We're sitting at 2.5% from the 10-week. We're not overbought. We're not overextended. It doesn't owe us anything. We're not in any sort of risk parameters. It's just a good place to be. Looking at the markets over a 5-day period, we've got two that are in the red. Energy's down 2%, and technology's down 0.75%. It's still above that 50, but we tested it. Looks like we might give it back. If we break that 50 again, it's very likely we're just going to come down and try to take that 200 out again. It might look a lot like building materials. And for XLE, this continued weakness implies we're coming back to that 50. Healthcare, we got the pinch coming, like we're going to get that 5,200 cross. But it's not set in stone yet, especially with that nice reversal, that evening star reversal on the move back up here. So we'll see if we're able to get through the 200 on healthcare or not. It's not looking good. Consistent and persistent lower highs and lower lows. It's the very definition of a downtrend. So China's down a little bit, not a whole lot. Nat gas is up, but it's more of a reflexive bounce since it was down like 12% over a 5-day period. So this 3.5% bounce is probably more of a dead cat bounce than anything else. Gold miners, biotechnology, bonds, Bitcoin, and a little bit of semiconductors. Semis can move us. So, it could be a face ripper kicked off with semiconductors and then options flow come in and, it can break us and make us. I don't see it at this point as wishful thinking, but it won't hurt to keep it on the radar, especially if we continue to see this market maker move actually turn into something. Like why are they worried in the first place? So we got some solid moves in crude, compared to what we were just looking at in the ES. This thing's actually going somewhere. So if we can play solid rejections off the edges here, I think that'd be a much better play than fighting with the ES today or the NASDAQ. I mean, the NASDAQ had been dragging its feet, right, over the last few days, and the ES has really been doing the work. So if we're going to get a solid breakout here, got to have nice, clean range, really tight Globex structure. Break that to get into the next zone. That's a wide zone. You can tighten it up a little bit if you just want to use Wednesday's intraday first. That'll still keep your top in place. It just expands the bottom. Then the next level, right? So maybe we get something in the NASDAQ if we can get out of this, or we got crude. I mean, you got to admit that looks really good on gold too. Just get out of the box. GTFO on everything today. GTFO, we got to get out of the box. The 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 fear is that we're just going to sit in this tight little wedge and price is going to random walk through the day and it's going to have no solid flow off the edges and it's just going to be trash, right? So it's not worth trading in that environment. Pick a different product. All right, so maybe the hedging that we're seeing is going to come from the carry trade this morning. There was a little bit of talk about the peso earlier, maybe like an hour ago. So it might have kicked something off in that direction. Silver, gold, precious metals, a little bit of construction, uranium, those small caps. It sounds good that they're up like that, but if they're just going to cluster like this, then I think they'll be a nice short. Let them hold that cluster, fall out, and just short them back to Wednesday's close. But, gold and silver kind of have the same setup. That's not unusual either. Yeah. If it's a rug pull, we'll see it in everything. Silver, gold, precious metals, small caps, crude. They've all got that gapped up cluster. And pot stocks don't. They've actually ground their way up and they're working on a breakout. Yeah, even bonds have the same gap. So just watch bonds and yields. Bitcoin, yeah, it took a grind up. See if we can keep the risk. Even financials have the same look. So what I got for you guys. Be careful, be safe. No, watch the clock. I'll see y'all on Monday.